Welcome to the Stocko YouTube channel. In today's video, we're going to be covering the SoFi stock, specifically the SoFi earnings and the overall market as well. Right now, the market has been absolutely insane as of last night because we got that DeepSeek China AI news that, they have better technology, better AI for lower costs. And that just absolutely started tanking the market. I believe SoFi was down about 4%, 6 hours before earnings even came out. So that's just, not the best case scenario. And overall today, the entire market is getting clipped. You got companies like Nvidia and Broadcom down 17 to 19%. These are the most profitable and durable companies in America. But guys, my prediction for the SoFi earnings was either we moon launch right off of the SoFi earnings, due to, excellent performance on revenue and guidance, or option B, which was that sell off, consolidate, and then moon launch to higher levels. Guys, it looks like we have deja vu happening again. The exact same scenario that happened inside of Q3. The SoFi stock finished down around 15%, consolidated, and then moon launched up $7 additional. And it looks like once the smoke clears, that is likely going to happen again because SoFi just had amazing Q4 earnings.
My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time, and I've been successfully trading since 2009. This is where we save time, make money, and start winning with less risk together as a team. But before we start trading, let's get into the video of the day, and be sure to stick around to see how we rank this out of 10 because it ain't going to be good. Oh man, be sure to subscribe if you haven't already. So, old Kyle. Anybody else watch South Park? Every time I hear Kyle, I'm like, Kyle. Old Kyle was telling us all about how SoFi was. Here's the two things that's going to happen. SoFi's either going to go to the moon, or SoFi's either going to go to the moon. There's no in between. I feel bad because, clearly Kyle has a ton of money invested in SoFi. I don't think he understands what risk management is. I'm worried for him. I mean, maybe he's up so much money in SoFi, it doesn't matter, right? But it reminds me of the elections. I saw lots of people making their election predictions, right? And of course, I saw some people saying that worst case, Kamala was going, or no, best case, Kamala was going to win everything. It's going to be literally every single state. Worst case, she was going to sweep all the swing states and still win, right? That was their best and worst case, that she was going to win both ways. It feels a lot like that to me. And this is what I get worried about when, and this is why I make these videos, by the way. This is what I get worried about when people come into the market. And a lot of you have said this exact same thing to me, that you watch these videos on YouTube and you came across my video giving a different perspective, giving a realistic, a logical, a facts-based, only price pays perspective. And then you're like, oh, there really is good content on YouTube, right? Now, it only took me 2,100 videos to figure that out. Thank you, Miraculous, for noticing that in the Discord. But I love this. I love that I could talk about stocks all day, every day. It seems like Kyle could too, as long as it's one stock. But my problem here, and why I like to go back to Kyle's videos, is I think a lot of people fall into this same irrational exuberance that Kyle exhibits here on whatever stock you want. Name Nvidia, name SoFi, name Palantir, name whatever, right? And I think a lot of people get this same wrapped upness, the same excitedness about a stock, and then completely forget that your money's at risk. Anytime your money's in the market, your money is at risk. When my money's at risk, I'm not giving it any room, not at all. Ryan says, oh, it's a necklace dude who told us to buy SoFi. Frizzers says, SoFi crash, OPFI rose. All right. Angry Baker, this guy looks like the guy that tried to pickpocket me when I was in Croatia. Wes says, it's already a 4. Tom, congratulations on your marriage, my friend. Or if that, I can't really tell from the perspective here. Maybe that's your daughter. Congratulations on her marriage. Either way, congratulations. He's laughing now. He's laughing because how bull this guy is on SoFi. Yeah. Jean-Louis here. Alan says, SpaceX is going to the moon, not SoFi. ESAT, hit and run. Yeah, this dude got hit and run. So he's trying to bring in, let me throw on this map real quick. He's trying to bring in all these other things that are happening, right? He's trying to bring in the fact that this DeepSeek AI thing was coming out. And it did absolutely impact stocks like Nvidia, down 10% this week. Broadcom, down 13%. AMD had a virus, apparently. Intel Tesla, whatever. He's trying to make the connection that DeepSeek, which has, in my opinion, nothing to do with the financial space, nothing to do with SoFi, is the reason that it was down. Not only that, he's trying to justify and saying the whole stock market across the board got destroyed. That's not the case, my friend. Kyle, it's not at all the case. In fact, we were looking at this yesterday. You could go to yesterday's video and see it was another ad. It was concentrated in just the tech sector. Concentrated in just the tech sector. This was not a broad-based, everybody's scared, sell everything kind of fall yesterday. That contagion that you're trying to say is what happened to SoFi didn't happen. It wasn't there. But I'll tell you exactly why in just a couple minutes. I tease you along here. I'm gonna tell you exactly why it crashed. Just hang on. ESET says like Monster or MicroStrategy, not Monster. I always get those confused. Lunar's going to the moon in 28 days. Tom, my wife, and I married recently. Congratulations. Very cool. All right, so let's look at this. Thomas says, appreciate your point of view too. Good to have some contrast for sure. All right, let's see what he has to say, and I'll tell you exactly why SoFi crashed.
Beat on the revenue, a beat on the bottom line. They increased guidance, on revenue from where analysts on Wall Street want it, which was 18%. These guys came in at 23 to 26% growth, just smashing revenue estimates. But they did come in slightly softer on EPS prediction of 28 cents. They came in around 25 to 27. So literally just a couple pennies off. And the SoFi CEO has come out and said that they plan on further investing in the business, further investing to make a bigger profit in the future. And it looks like they're just going for that, 2026, expectations that they put out of 55 to 80 cents because they reassured that guidance today and said, hey, we are well on our way to that, 2026 guidance. So everything right now looks like SoFi is just investing for future growth. And we already know the way SoFi likes to do these earnings report. It's just a beat and raise, and a beat and raise, 3 quarters, heading into the final quarter of the year. And guys, I think this is a completely different year from 2024 because in 2024, the Q1 and the Q2, guys, these were just flat, revenue quarters. They didn't have any growth at all for Q1, Q2. I think, for 2025, we are going to see continued growth every single quarter. And there's a possibility that this stock may perform better than it did last year. Even with flat growth in last year's 2024 for the first 2 quarters, SoFi was still able to increase their stock price 140% from $7 to $17.
He's totally right. It has been a monster run. Absolutely monster run. Don't get that twisted. I will not say that SoFi didn't monster run. It did. It's a 150% move since September to now. 150% move. Yeah, it for sure did. No doubt about it.
It looks like management knows exactly what they are doing, guys, because if we get that same price action of 140%, even having, stronger first half of the year in 2025 for Q1 and Q2, guys, 140% gain from a $16 level is about $37, stock price. And it looks like management is still setting themselves up to hit that $45 bonus package. This soft guidance will allow them to stay one step ahead of analysts moving forward and have further investments to grow profitability even bigger inside of 2026. So guys, we are literally getting deja vu once again for the Q3 earnings, okay, where we literally sold off the exact same percentage and then ripped up $7. So guys, I think SoFi management is just one step ahead of these analysts, and they knew exactly what they needed to do to hit that long-term profitability, 2026, 55 to 80 cents. And it looks like we are set up for massive success in 2025 if you continue to listen to what the management is talking about, with 2025 being one of the best years in SoFi history. So I'm very excited, guys. With the DeepSeek news right now, Fed on Wednesday, you need to give this, earnings report about 72 hours for the smoke to clear and get all of these, day traders out, paper handers. And then we will likely move higher.
Bro, give me a break. Here's the thing. All right. So like I say, I have been mentored by 5 of the market wizards. Do you know what their number one thing is? Number one, Larry Hite, first $1 billion hedge fund manager, and I worked together. He spent 3 hours telling me the same thing. And I was like, oh my gosh, I know he's old, but come on. I know he's already said this. It's learn to take a loss over and over and over. You go to any market wizard that's been successful. The only way that this works is when you learn to take a loss. Now, I'm not saying he needs to take a loss here. What I'm saying is paper hands are the only way you stay in the game. It's just a fact. Losses hurt more than winners do. Let me show you a math example here, right? So let's say that from the very high peak to this low right here, it was down 17% on SoFi. All right, 17%. Can you guess what it would take in percentage terms to get back up there? Because it's not 17. It's not. It would take you 21 and a half. So a 17% loss takes 21.5% to get back up. let's expand that a little bit. Let's say it goes down from $18 to 10. Okay, just for example's sake. That's a 45% decline. Do you know what it takes to get back a 45% decline? An 83% return. Okay, losses work for you so much more, or work against you so much more than winners do. And the only way that this game works is by having paper hands and taking those small losses so that they don't turn into the 45% loss that you now need an 83% return to get back. Ryan noticed a big, nice block up there, but that's not the real reason. That's not the reason it crashed. Put in the chat if you think you know why it crashed. I'll tell you exactly why. I will tell you exactly, precisely, take it to the bank why it crashed. You're not going to believe it. Jonathan, bro. Sick profile picture, Jonathan. Glad you made it. Should have moved on Friday, unfortunately. Do you typically sell right before earnings or not on earnings day? I like to trade up into earnings. Who's got earnings soon? Does Nvidia have earnings soon? Not really. It's HSBC. A couple weeks. What about CMP? No. Palantir have earnings? Yeah, there we go. Palantir is a great example, right? I like to trade running up into earnings and then get out the day of earnings if I need to, but I might hold it. It depends on how much room I have to my 10 period moving average. But it's a good question. Christian's here. Good to see you, Christian. Jorn's already got a 2 on it. ESA with an average price of $14.50 between Goldman Sachs, UBS, Needham. There's an implied 9% downside for SoFi from the most recent analyst ratings. Bro, you should tell Cal. I don't think Cal knows about that. Ryan says 32. 34. Oh, those were the guesses. Okay, 32% gain. I'm sorry. I was like, wait, you're going to give him a rating of 32? Steven 4913? You give him a rating of 34? No, I got you. Tom, appreciate your videos. Very refreshing to see someone who's not pushing their own investments, trying to influence others to buy in. Fantastic content. I'm new to investing your 10 moving average advice. Amazing. Yeah. So, I mean, I had CMP earlier this week. I got out. I took a small loss. I had HSBC earlier this week. Got out. Small win. My returns, I got it right here. My returns, I mean, they're modest for the month. I only had 2 trades with a basically 1.8% return, annualized 27%, right? But we're just getting started. We're just getting started, and there's no rush. There's no rush to this game. Okay, the trades will always be there. Wes says, "No, do not diamond hands that, Wes. You know better." Robinhood is ready. Preach, Alan. Because everyone else thought it would rock it. Good answer. Good answer. Mark, waiting for the XOM CVX earnings on Friday. Mark loves his energy stuff. Mark loves his energy stuff. Oh my gosh, Mark, did you see this double head overhead resistance here on Chevron? Microsoft has earnings tomorrow. Let's look at Microsoft. Ooh, here's one we talked about. I'm glad you mentioned it. So this is one where I mentioned last week how to calculate the expected move and what that would look like for Microsoft. Now, it hasn't had earnings yet, but imagine it could go up or down $17-ish from when we priced it out. That's what it would look like there. And it would go into boom, overhead resistance both ways, and then boom, it would be under the 50-period moving average if it hit that. Now, it could go anywhere, as we've seen with SoFi. It can go anywhere. They can give you the best earnings announcement ever, and it still go down. Mikey Mike, paper hands are similar to jazz hands. They're both annoying. Dude, call me annoying, Ben. Microsoft earnings will impact a lot in the stock market. Can't wait for that. So to ESAT's point, there's another ad. They love their ads over here. So the S&P 500 is market cap weighted. So the bigger the square is on this map here, the bigger of a move that will impact the market, right? So something like Costco, as much as I love Costco, it's not going to have a big impact in the market like Nvidia did yesterday or Microsoft could, given those announcements. So energy makes the world go around. And Wes says that's true. All right, I'm going to tease this out just a little bit longer. I will tell you exactly why it crashed.
Heading into February. Be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated daily on all the breaking news with the SoFi stock. Let's get into the video. All right, guys, you can see the SoFi stock right now is down about 11.5%. It did move up to about 7.5% down, hit lows of about 15%, 16%. in the pre-market. So it looks like, a lot of people have gotten shaken out. But guys, you need to see what the overall market is doing right now. I mean, this is absolutely insane. If we had a normal, market today, I mean, we'd probably be down about 5, 6, 7% or something like that. As you can see, today is not a normal day inside of the market. Look at the chip stocks right now.
Right. It was a bad day on the market for sure, but that bad day was really contained. It was really contained to these chip stocks that he's pointing out.
One semiconductor is down 15%. Broadcom is down 19%. And the largest company in the world, I don't think they're the largest now, behind Apple, Nvidia is down 17%, guys. So you can see what this DeepSeek AI China, company is doing right now. It's absolutely shaking up the market massively. And SoFi is going to get that hard sell algorithm inside the entire market. Other companies that we watch, Affirm, Upstart, Robinhood, all getting hit pretty hard, 3%, 4%, 8.5%. Guys, this looks like a buying opportunity across the market, not just on SoFi, but, other high quality names as well. And I believe SoFi had a very, very solid earnings. They just went a little soft on that guidance, and it will come back to, give us some massive boost once we get to Q1, Q2, Q3, Q4 for this upcoming 2025 year, guys. They're going to be smoking all these analyst projections moving forward. All right, guys, and take a look right here. SoFi CEO on earnings. You can see the title on CNBC. They're going right after, what the stock is going down for. Look, EPS lower due to long-term investments in business over near-term profit. That's exactly why, I missed, and other, people that cover the SoFi stock missed the projections for what we thought they were going to hit, which was 28 cents. We thought they were going to come in around 30 to 35 cents, but it looks like SoFi is foot on the gas, still in investment.
Well, here's something you got to know. It doesn't matter. It doesn't matter what your projection is. It doesn't matter what the actual results come in as, right? The market's going to do what the market's going to do. It could go up, it could go down, but you can't peg it to one certain thing, except I can. Hang on.
Investment phase for 2025 while growing top line revenue 23 to 26%. Here is the CEO right here.
Business is the best it's been, and I think the best is yet to come in 2025. We actually not only beat revenue and earnings in the quarter, but we raised 2025 revenue above consensus by about 10%. I think the thing that the market's reacting to is our EPS is slightly below where the street was, and that's primarily because we want to make sure we're investing in the business for the long term and not just driving profitability in the near term. So we're committed to 30% incremental EBITDA margins, which is where we were in 23. 24 was a conservative year in which we drove to GAAP profitability for the first full year, and now we're tilting back more towards investment so that we can grow the top line for this foreseeable future over 20%. We actually took our guidance of the CAGR from 23 to 26 and revenue up relative to before based on that incremental spending. So feel great about the business, a bunch of huge milestones in the year, and we're really happy with the outlook that we have.
We mentioned these originations. Do you think that points to a new chapter in the loan cycle?
There's definitely a more favorable backdrop for lending. We purposely took an approach in 2024 that was conservative and diversified the business. By the end of the year, our technology platform revenue and financial services revenue now accounts for 47% of our total revenue. So we're not a lender anymore. We're much more diversified. And we're also moving the revenue that we're generating to fee-based revenue. In the quarter, we had a record amount of fee-based revenue, up 63% year over year. That will be the growth driver going forward. It was 40% of revenue in the fourth quarter, and we expect it to be the significant majority in the future.
All right, guys, you heard exactly what he said, guys. Top line revenue growth is going to grow faster than projected. Even though they put out 23 to 26%, guys, they're going to beat and raise the.
And here's the thing, right? He can talk up the stock all he wants. The CEO has no impact on what the price of the stock is going to do. But I'll tell you what does. I hope you've been ready for this, right? Instant Defense says, I'm trading SoFi. Bro, I'm trading SoFi too. I'm trading it with holding all my cash. Rick says, oh, it's a buying opportunity. ESAT says, oh, it's not going up. That's not good. All right. I've teased this long enough. I'll tell you exactly what happens in the market and exactly what happened with SoFi. You ready? Sometimes shit happens. Sometimes shit happens. Sometimes you come out with the absolute best guidance in the world. Everything is bullish. It's the most clear blue sky ahead, and shit happens. Okay? As a investor, as a trader, all that you need to know is the stock price going up or is it going down? It was going up. And then it ran into this overhead resistance order block, which I've been touting for weeks now. And this is not a new order block. This goes back to 2021. The longer these go back, the harder they are going to be to breach. And sometimes shit happens. And when I say sometimes shit happens, the best guidance in the world could come out and the stock still goes down, which is exactly what we're seeing here. It's not because they missed it by 2 cents on their EPS, right? It's not because they're investing more in, whatever, infrastructure versus loan originations, whatever the case is. It's not that. Sometimes the market just sells. Now, does that mean that you just have to throw up your hands and be like, oh, F this noise, I don't know what I'm doing anyway? No. You have two insurance policies when you put on a trade. And I've talked about this recently because this is so critical. This is what's critical to your success. This is what I put as at the bottom of my funnel because it really matters that much. Your position size. Your position size is your first line of defense, right? Let's say you have enough money to buy 1,000 shares. If you buy 1,000 shares with every dollar you own, and maybe even go on margin to get 2,000 shares, and then shit happens, that sucks for you, dude. That sucks real hard for you, right? Let's say from there to there. That sucks real hard for you to watch 11% of your account evaporate overnight. But if you position size correctly, some people call this diversifying. If you position size correctly, then when something like that happens, it is a paper cut. A paper cut. Like, I'll survive. I lost 1% of my account in the trade. I'll survive. And I don't think a lot of people understand how you need to look risk first at your trades. And then the second insurance policy you have is on the chart, right? You can look at the charts and you may not have the order blocks that we have here, but let's say, for example, your exit point was 1615, right? At the 20 period moving average. If it goes down and it hits that point, you are obligated to get out. If you don't get out, if you sit there and fumble and wait and hope and pray, this is what's going to happen. Where's that slide at? Hold tight. Where's my slide at? It's a good slide. Hang on. This is what's going to happen. You're going to hope that it goes up like this, right? As it's going down, you're hoping that it's going to turn around. What's going to happen is it's going to continue on down without you. So you've got those two insurance policies. It's up to you. It's up to you how big you want to trade it and how much room you want to give it to the downside to find out if it's going to work. I would suggest giving it as little downside that's going to work as possible. In fact, David Ryan, one of the market wizards I didn't work with, but David Ryan says, if you buy a stock, it should go out of the gate like horses at the racetrack. When's the last time you saw a horse at the racetrack back up into the gate? You didn't. You don't. That's the horse you don't want to own. If they don't jump out, if they don't go, but instead they sit, dead money, or they go backwards, start losing, you don't want to own it. You don't want to own that horse. But SoFi's a boring company. Randy says it happens. Cedric says, thanks, Chris, for the video. Very interesting after earnings. Well, Cedric, thank you for watching this video. Instant defense. I have money in SoFi Bank. It has the best interests. It may. I have no idea. I've never looked into it. Margin for Mikey Mike. Vanguard Group has a bunch of shares. Cool. So let's do this. Let's rank this video. I want to get your opinion, of course. And of course, we're going to be live trading here in a minute. But I want to hear your opinion. How would you rate this? This reminds me so much, as you put those in. This reminds me so much of the market cycle right here. This is what I was pointing to earlier. People getting this euphoria stage. Let's do this. Let's do a side by side. It's not the first time you see me do this. Just a second. Right. I mean, this really, really reeks of the right-hand side of the curve hitting that top. Does it not look like a really strong analogy right there? A really strong comparison there? I mean, to me, it really, really reeks of that, especially when you get YouTube channels devoted to one and only thing is talking about that stock. That is euphoria at its finest. But not only that, I found this cartoon the other day, and this is now in my deck to always refer back to. But this is what happened yesterday, right? Somebody was like, oh, I've got a stock that could really excel. Really excel. Sell. Did he say sell? Everybody sell, right? This is a trend. This is a human version of what trend following looks like. Pretty cool, right? The question is, are you going to be one of these people who are helping build up the trend? Or are you going to be the other person who in the midst of all these sells is like, I'll buy it, as they continue to sell. Are you going to be the person who goes and sells it when everybody's saying, I'll buy it, and get run over? I know I won't. No way. ESAT, I told you this last time. Nobody gets a 7. Do it again, I'm banning you. Permanent ban for ESAT. No, I'm just joking. Bob says negative. Bob's not holding back today. He gives it a -7 because nobody gets positive 7. Mike, no. Take it back. Take the 1 off that, or take the 0 off that. Take one of those digits off. I'll give you that. Ryan says 1. Never thought I would see that necklace again, let alone selling SoFi. Alan says 4. Christian says 2. ESAT says 1. Never mind. Not 4. 3. 2 or 2. 3 or 2 at best. Keith, how you doing, bud? Glad you made it. I think we're in complacency at this. What? You think we're in complacency? Hold on. Where was that slide at? Okay. I thought complacency was one of these down here. I was like, no way. Hang on a second, Keith. No, okay, that makes sense. Punko, bro. I was gonna make a joke, but I'm not gonna make it. You guys can make that joke to yourselves. The more I see videos pumping SoFi, the more I'm cautious and nervous. Oh yeah, dude. That's exactly it. That's that irrational exuberance that they talk about in the markets, right? It absolutely builds this slope of hope, as they call it. This is called the slope of hope. And then the other side is called the wall of worry. And I don't want to trade on the right side. I want to be on the left side. Let me see. He says pumpkin dumping company. Okay. Cedric says 4. Ivy League redneck. Hey, you came the other day. Glad you made it again. John Louis says 2. Hectech says 3. Nate says 2. Rick says 3. Teddy with the sweet ass tractor there says 2. Good to see you, Teddy. ESAT, the best channel on YouTube. I'm so glad I found this. I'm so glad we found you, ESAT. And Mark, the smartest man I know. Mark is one of our co-founders here. This handsome gentleman right there. Nico, how you doing, Nico? Nico says 2. All right. My final rating is frustrating. I'll give him a 3. I'll give him a 3. I mean, I've given him 1s and 2s before, but I'll give him a 3 on this one because hopefully by now he's seeing that you can be as bullish as you want in the market. You can have the highest price targets in the world, but the market's going to do what the market's going to do. You're either along for the ride or you're going to get yourself ran over. It's so true that sometimes even the best laid trades, shit happens. Aaron says SoFi's a $3 stock. Gerard says 2. All right, let's do this. Let's shift over and go to wait a minute. Mark says if I'm telling you, if you keep telling people that, they're going to start to believe it. Let's look at today's member highlight over in our Discord. Okay, so there's been so much chatter in the Discord lately. I am so stoked that everybody's over there dropping their new trade ideas, things that they're working on. Of course, a couple things I do want to point out is we have an area called the VIP Investors Toolkit. Where's this at? VIP Investors. This one right here. I would highly go check out what's in there. The number one thing I could tell you is to go access the Ultimate Trading Power Pack in here. Now, once you get into here, this is a private Google Drive links right here. And these videos and audiobooks are not on YouTube anywhere, but they are literally step by step how I trade in full detail. And I mean, some of these are 45 minutes to an hour long, giving you different lessons. So if you're looking to figure out how to trade, you're in our Discord, go check that out in the VIP Investors Toolkit. Also, I just wrapped up our documentation. I'll show you what it looks like this morning, and I sent it off to Mark and Mahesh to review for step-by-step how to use Outlier. Give me just a second here. So, we worked really hard on this with the step-by-step figuring out how to showcase how it works inside of Outlier. So I know this is going to come soon, so just be prepared for that. We also have tons of new videos on how to use Outlier as well. And Mahesh and Mark are working on a new indicator for this one right here. So we've got tons in the process here to make Outlier even easier for you. Additionally, let me see what else is going on in the Discord I want to chat about. I locked down the Well, Mark, you're a moderator. That's why it worked. Not so fast, my friend. So this channel over here, the Outlier Trading Room, is meant to just be my trades that I'm putting on here live in the trading room. And there's been a lot of chatter in here, and so no offense, but I wanted to lock this down. That way we can have different trading ideas set up, different trade setup ideas over in the trade setup ideas area. So I locked it down, and then looks like Mark was able to thwart that because he is also a moderator. Mark, jeez. But Simon set this up. Like, he's Gen Z. I have no idea what I'm doing. I'm just clicking buttons here. Mike says 93 on the bear list. Oh yeah, we'll get there in a minute. Coach B, I'm late. Crap. Let's see if 2s or 3s and I didn't miss. Love the tool. Well done. Thanks, Cedric. Mike says that's awesome. Yeah, we're working on it. I mean, like, you guys know, we push out updates constantly. Now, there was a question from Ryan, who I believe is here in the chat. He asked about selling options, and I'll give you some perspective. I spent a lot of time losing money selling options. I'll put it that way. I would say I conservatively lost $200,000 selling options. Hey, Ryan. Ryan's here. Hello. First off, I wouldn't sell options with your money. That's how I would put it. Let's break this down. I don't have slides for this, so we're gonna have to Google it around. Real quick. So let's do short put options versus long calls. Let's see if we can find a nice graphic right there. That's a great graphic right there. We'll roll with that. Open image in new tab. Okay, so the red line is when you sell a put option. The green line is buying a call option. Okay, so I can nerd out real hard, real deep on options. I'll try not to. I'll try and keep it PG, but I could go triple X rated on options any day. First, when you sell a put, you are, in theory, putting on a bullish trade. Okay, let's say, for example, the current price is at, not the best example here, but we'll work with it. Let's say the current price is at $35. Okay, your break even is whatever the price of the option was that you sold. So in this case, it looks, let's use round numbers. Let's say it was a $2.50 option. Okay, so your break even on the train is $32.50. On the trade is $32.50. That sounds fantastic. That was the allure for me. Hey, you know what? The stock can go up, it can go down, it can go sideways, and this dude's gonna go to the bank. Didn't work like that. So we've got this the setup here. So let's say you sold it for $2.50. The issue is that you need time decay to work, right? You need time to pass. Okay, you need time to make that work. Okay, so over time, you're going to make more and more and more of that $250, and by expiration, hopefully, you'll be taking home all of those $250. But to put this trade on, I would say I think the margin requirement is 20% of this. So let's say 35 times 0.2 times 100. So you're going to put up, oh, that can't be right. But let's say it is. You're going to put up, we'll just use that for example. You're going to put up $700 to make $250. Okay. So the very most return you can make is about, let's use round numbers here, about 33%. The very most you could possibly make. And that sounds great, right? But what happened to me over and over and over and over and over was that I would have a losing trade. So let's say if it started at 35, it would blow through 35, 34, 33, 32, 50, right? Blow past my break even and continue on down to 30, right? And now I'm out like $500. But what really would happen was it was more like a 10-to-1 for me. And that's why I say I don't feel like that margin's right. It was like 10-to-1, where every time I lost, I would need 10 perfect trades in a row to get back to break even. And that freaking sucks. You're telling me I need to have a 90% win rate just to break even. That's what that means. Do you know how hard that blows to have a 90% win rate just to get to break even? Like, you got to be perfect. You got to be making sure all your T's and I's are dotted, because it sucks, right? And there are channels out there on the YouTubes that'll tell you the exact opposite. They'll say, this is the only way to trade. This is the smartest, easiest way to trade of all time. I'm going to tell you the opposite, right? Because let's say the same option, right? The most that I could lose is $2.50 that I purchased, and the price is 35. So I need it to go to 37.50 to break even, okay? By expiration. But the difference here is that my $2.50 in risk, I can get not only $2.50 in gains, but I get $5, $10, $20, who knows how far. My risk to return is so much bigger here. So much bigger. Now, there's also a few key strategies that I do. And one is that I go deep in the money. So I have to pay as little of that extrinsic value, as little of this as possible, right? If you're selling it for $2.50, that means somebody out there is paying that $2.50. And I want to pay as little as possible. And by doing so, I basically don't have to do hardly any extrinsic value. So at the end of the day, you can sell or buy a call, or sell a put or buy a call at the same strike. Both of them have a bullish profile. One of them, the most you can make is, in this case, the premium is $2.50. The other one, the most you can lose is $2.50. And as a risk-first trader, this is where you need to be. The most you can make it $2.50, but the most you can lose is undefined, literally undefined. Literally, if you were trading SoFi and it went down $10, you're down $1,000 a contract when you were only going to make $2.50. That sucks. That was my life. Or you can be risk first and say, the most I can lose is $2.50. I'm still going to survive because I position size correctly. But the most I can make, who knows? Who knows how far this can go? So that's my perspective on selling. And same with spreads, right? Spreads are no better. Spreads are the same thing. That's my perspective on selling puts versus buying calls. So, hope that helps. Of course, let us know in the Discord if we can help you out anyway, and tell everybody you know about Outlier. And hit the like button too. Now back to trading in the Outlier trading room. Real quick, what is Outlier and how does it work? Well, Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much. And I love that. I think that is so handy and allows you to get into the stock before the Outlier move happens. And you can get into the Outlier annual pass for just 82 cents a day. But that offer ends at the end of the week on January 31st, so don't miss out. Now, my style of trading is called the golden ticket trading strategy, and always starts with the market with the Outlier trend template. I want to see the 10 period moving average over the 20 with price over the 50. Now, yesterday, I went to cash, all cash, because it looked like we were going to close under this 20, under the black line right here, 10, 20, 50. We didn't. We had a huge rally in the last few minutes. And in fact, we're having a huge rally right now, right? So we're pushing well back over the 10 period moving average. So my rules are, if it closes under the 20, which like I say, it looked like that yesterday, so I went ahead and closed everything. Wait to put on new trades until it's back over the 10 moving average. So we can actually advance from this point because it's back over the 10. Let's go to the market breadth. This is concerning to me. Market breadth is very, very concerning to me. Market breadth is how many stocks that we have listed as buy signals, right? That's this green line right here. If it was at 100, that would mean every stock that we cover has a buy signal. In this case, what happened was we crossed this over on the 10 moving average around January 2nd, right? It absolutely leaded the market back up, right? So we had this cross bullish on the bullish on the breadth, took a couple days, and then it caught up and went up after that, right? Well, now the opposite's happening. We have peaked over 75. It went from 73, 74, 75, and now it's got back down to 74, meaning we have hit an overbought area and it's now coming back down. This is a get out of the, I'm going to give you a heads up here. This is a get out of jail free card. I'm giving it to you right now. It's your choice if you want to use it or not. I'm not saying that we're about to crash, but what I am saying is that so many stocks have gotten buy signals. All that's left, all the buyers have come in. All that's left are for the sellers to come in. All that's left are for the sellers to come in because we have peaked on the market breadth and it's starting to come back down. Because of that, I will not trade. I will not put my money at risk in this market right now. No way. We do have a buy signal on the SPY. We do have a bullish market trend, but our market breadth has turned bearish for me. And that means everything to me, right? I want to make sure all of these are lined up, even the sector when we get to that point, because it makes trading so much easier, right? 40% of the stock's move is due to the market. Okay, 40% is due to the market. The other 40%, or I'm sorry, 30% is due to the sector. So if the market's pushing higher, if the sector is pushing higher, the last thing that, the last piece of the pie, basically, the last 30% is the stock itself. So when you run out of, what is the word I'm thinking of? Not agreement. Oh, damn, it starts with C. I don't know. Need to read the dictionary more. Congruence. When they're out of congruence here, in my opinion, the best trade to make is cash. Cash is a trade. Never be afraid of that. Cash is a trade. Ryan says, yeah, I get it now. Cool. Randy. And all that's left are the leftovers. Exactly. Heck tech. Why does market breadth look like the 5 EMA? Let's take a look. So the market breadth is the green line. The 5 EMA is this right here. So the 5 EMA, this is a 5-period exponential moving average. And when you're pulling it close like that, it's going to look really similar. I like to follow the 10 period. You could follow the 5 if you wanted to, but you're going to have a lot more crossovers, right? You're going to have a lot more of these periods where it's a little bit noisy. In fact, if you wanted to really look at something long term, you could look at like the 50 EMA there. But that's just what I found live trading this with real money. That running with the 10, looking for those crossovers has worked really well. And to give some perspective on what that means, let's go to our watch list here. And you'll see there were 63 new on the bull list today, where there was 93 new sell signals today. That's what that means, right? That is what it means when the market breadth has peaked and is starting to come back down, is that more names are getting these sell signals and less names are getting the buy signals. Keith, earning 4% APY on my high yield savings account. I'll take 3.9% risk free growing this year. Yeah, dude, that sounds great. So let's do this. No trade setup for me today, but of course, in the chat, tell me what you're trading. Keith is trading on a 4-year 4% savings account, which is actually pretty great. Wes, you know, you could put a 7 EMA, or no, because nobody gets a 7, Wes. Damn it, Wes. You should have known. Y'all be sure you come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop a recommended video up right now, and I would recommend you watch it. Have a fantastic day, and we'll talk soon.